Guys, welcome back to our channel. I'm Kenya with BK Trading Academy, owner, professional trader, and educator. And in this video, I am showing you how to find high probability setups as an intraday trader. I'm going to specifically focus on the KISS 2.0 strategy, which is a system that we've been teaching our students for years. It is extremely profitable. I've turned six figures with this particular strategy, and I have tons of data to back it up to show that it's effective. And I show our students day in and day out that this system is very profitable. So let's go ahead and hop right in. I'm going to walk you step by step using Euro AUD, which is one of my favorite daily pairs. I'm going to show you exactly how to mark up your chart, how to study the price action, and how to plan out that trade, where to put your stop loss, how to aim for targets, and also how to enter the trade with confidence. If you are new here, make sure you subscribe, turn on the notification bell so that you don't miss our future content. And if you're returning, welcome back. Let's get started.
Yeah, I know I got problems, and I don't know where to go. I don't want to put the blame on you.
So the very first thing that we're going to do is go out to the higher time frames, such as the weekly. We can also look at the monthly just to get a feel for what's going on overall. You can see on this monthly time frame, if we just kind of bring our chart together, price is in an uptrend on the monthly, and it looks like we were consolidating for some time where price was at this resistance at 1.6854. Notice that we recently just broke below this area here, which was 1.6133, and we dipped right below it, but this is all a reversal zone. So notice this reversal area here where the price was a rejective high back in November of 21, and then again it was support in June of 23. Then it tested again as support, and this month we broke below that level, actually last month. And so we want to see, is price going to continue to proceed downward, or is it going to continue to move upward? We look at the monthly to kind of get clues of what could possibly happen, but one thing we can definitely see is that this is our monthly support right now, and I do see that price is retesting our previous area of monthly support / resistance. So now if I move down to the weekly, you can see that very clearly there. This is a reversal zone where more than likely the price is going to pivot after it has corrected now on the weekly. So looking at this weekly chart, we have a downtrend and price is in correction. So if we know that, that can help us to take a really confident trade on the lower time frame. Now, because price is in correction, you can see that we had some consolidation here previously back in February, and price broke below that area. This support became resistance right at 1.6416. We developed a bearish flag pattern. Price continued to decline, and now it's in retracement on the weekly, or pulling back, all the same thing. So more than likely, this is where sellers are going to step in again. So this would be your area where you would want to plan your intraday setup. So what we're going to do on this weekly time frame is we're going to note that this is our reversal area, and this is where price is pulling back to retest, and then we're going to move down to the daily. So we have a level above price, and we also want to mark a level below price. So let's say if we were going to intraday trade this, here is our resistance level, and then we want to put a level below price. So remember, when we're intraday trading, we're only going for about 40 to 60 pips. So I'm just going to put this right back at this previous area that broke the downtrend on this daily time frame. Now notice on this daily, we have a double bottom, and remember, the weekly is in correction. So here's your double bottom, here's your neckline, and you probably were thinking when price came back to this area, should I short from right here? Absolutely not. And this is why you need to look at the higher time frame, because look guys, the weekly already showed us that price was in correction. Because price had already declined here 1-2 times, more than likely buyers stepped in, and you can see how bold that candle is, how thick it is. There's no wick action there, so that tells you that buyers were strong, and this was not the place to start shorting. You also want to think to yourself, when you are shorting, you want to make sure you're getting a good deal in the market. So you never want to short too low. You don't want to short down here. You don't want to short too low. You want a proper retracement so that you can get a good deal and short with confidence. So now that price has broken our neckline on this double bottom on the daily, there's a few things that I see here. We are in a reversal on the daily. So here's our reversal. So now that we no longer have a downtrend, we need to switch our bias to the upside. So I'm going to go ahead and I'm going to connect this inside of a channel. because I like to just capture this for traders who struggle to see price action clearly. Now you can see that I have the price captured inside of a channel. So I'm going to go ahead and mark my zone. Here is my previous support slash resistance. We know that this is a reversal area on the weekly time frame. So this is going to be a nice little sell position here where we can possibly enter a short and take this back down to the middle of the channel. Now, when we trade channels, we look to short from the top of the channel. So this is our trend line resistance. And then we look to take profit near the middle of the channel. And the middle of the channel is always going to align with a reversal area. So guys, if you were to short from this area here, okay, you could short this, taking it at least to about 40 to 50 pips to the downside, but possibly you can get about 90 something pips out of this. But keep in mind, if you're intraday trading, you are only in the trade for the course of the business day. So you want to know that whatever pair you're trading, you want to know when it moves best, because you don't want to go into a swing trade or be in a trade overnight. Very important that you know when that pair is most volatile. So this is going to be your resistance zone that you would watch. And what you want to see is that price stays within your channel, that you start to see some type of wick rejection within this zone, just like you did previously. And you want to see confirmation of sellers stepping in. So what we can do is we can go down to the lower time frame, but we can go ahead and put a zone below price. So if we're going to take profit in the middle of the channel, this would be about the middle of the channel back at previous structure. And then we will look for price to pull back on the daily, possibly reject here off of this support, and then continue higher to retest this resistance right here at 1.6405. Now we have to take it day by day, but that is a possibility of what could happen. So now you see how I started from the higher time frame and worked my way down to find a high probability trade. And I'm also explaining to you patterns that I'm seeing along the way, why I would do what I would do, and how I would execute. So again, when you are trading channels, you want to make sure that your stop loss is outside of the channel. Now, where should you put your stop? Judging from this area here, we know that this is all a reversal area. So price could even go to the top of our channel and it could wick off of it another 37 pips to the upside. And what I'm looking at is this area right within here where we have a few wicks here where price wicked in the past and then it turned around. So if it were me, I would not put my stop loss within 37 pips of this channel. Instead, I would be planning an additional entry where price could wick off the channel trend line, and then I would put my stop loss above that. So I possibly would put my stop loss maybe above this high here. And this is all going to be subjective and within your opinion. You basically want to plan your stop loss according to your risk tolerance. But I would have put my stop loss somewhere above here. That gives it nice room for the trade to breathe. And also, if price does move to reject in that area, then we will be prepared for that. So let's say if I got in right at about, if I want to plan my entry, I can even get in right now at 1.6260. And let's say, I think that price is going to go another, let's say like 40 pips to the upside. This is where my second position would be. And then I would put my stop loss above that, probably at about 85 pips. For me, that's not a lot, because how I would approach this is lowering my lot size and spreading out my stop loss, because I want to give myself enough room or buffer that in case price goes against me a bit, I don't want to use tight stop losses. I just don't like to trade like that, but you might prefer something different. So if you wanted a much tighter stop, you can definitely put your stop loss outside of the channel and measure from about here to maybe, I would say maybe 54 pips or so. You definitely want to reach for a 1 at least to 2 ratio. So in this case, if you were going to be shorting from the top of the channel, taking it to the middle of the channel, that's about 98 to 100 pips. But remember, with an intraday trade, 40 to 50 pips or so is sufficient. But if you wanted to stretch it a bit, you absolutely could do that. So risking 54 pips to make 100 pips, that would definitely give you a 1-2 ratio and a successful trade. So if you are watching this right now on July 17th, then this could be an opportunity for you that you definitely can watch how it goes according to the analysis that I gave you. So what you want to do is make sure that you have a level above price when you are marking your chart. Always start on the higher time frame. Make sure you have a level below price, and you basically are taking profit looking at what price did in the past. So if you're going to short, you look left and see where did price turn. So here, if you were scalping, for example, this is where price might fall, and then it might go back up again, and then it might continue to fall. Whereas the next reversal zone is right here. So this is where you had resistance turn support and also resistance, and the price continued to go up. So this would be the next profit taken area here. So if you short from the top of the channel, you could take profit anywhere from the top of the channel to about this reversal zone here at 1.6187. So guys, that is how you start on the higher time frame to find a high probability intraday opportunity. And as you can see with Euro AUD, we started from the higher time frame. We noticed patterns. We noticed what price action has been doing over the last few months. We also looked at the weekly time frame. We noted patterns that we saw. We also noticed that price was in correction on the weekly. So that gave us a game plan and how to react on the daily time frame. So I just wanted to walk you through this process. I hope that you gain some understanding from it. If you do have questions, go ahead and comment below and I will be sure to answer them as soon as I can. If you are a new or struggling trader, I want to invite you to check out the Academy. All the details are in the description. We have a lifetime membership that is a one-time cost and you get a forever community. You also get us as your mentors for a lifetime. And we have an amazing supportive community that feels like family. You can listen to all the testimonials on our website and then make a decision to join us when you're ready. Otherwise, I hope that our content here helps you. God bless you in your trading. And I look forward to seeing you in the next training. Take care.
Yeah, I know I got problems, and I don't know where to go. I don't wanna put the blame on you.